we could build an app and everything, but we were not B2C people inside. So we were bootstrapped for 5 years, and then we raised money. So we didn't
and how this lending business it is different from a credit card issuing business. Hello everyone, welcome to the Domain Podium. This is Ramesh Chugh, and our today's guest, Mr. Rajat Deshpande, is the co-founder and CEO of FinBox India. He is an enthusiast fintech expert and a passionate advocate for startups. Rajat, alongside his fellow co-founders, established FinBox with the ambitious goals of establishing digital infrastructure for alternative finance solutions. Under his visionary leadership, FinBox has successfully developed a range of cutting-edge products within the realms of embedded finance and big data credit analytics. As we speak, FinBox has facilitated over 16 million lending decisions across India and Southeast Asia, contributing significantly to the region's financial landscape. Welcome to the show, Rajat. It's truly an honor to have you here with us.
Thank you so much for having me. It's great. It's a great pleasure to be on the show.
Thank you very much, Rajat. So, Rajat, let's get started with our discussion quickly. And I would like to start with one of the news that I was going through recently about your partnership with IIFL for one of your AI-powered credit decisioning platform, I think called Sentinel. I hope I'm pronouncing it correctly. So can you talk about this partnership for a couple of minutes and how important it is for FinBox, and what value addition or notable enhancements it brings to your company?
Absolutely. So first, of course, IFL has been a very enthusiastic and an early partner for FinBox. So they also invested in our pre-series A round. And then we've been, very closely partnered with them on their digital lending sort of program overall. And there are many programs that they run, and Sentinel is used across all of their digital lending programs as a decisioning system. Now, Sentinel was born out of, the internal pain that we had when we hand-coded policies for credit decisions, right? So, just to give you a sense of how parts of the credit decisioning life cycle, there is the data layer. You connect all the data and sort of make it usable. There is the scorecard where you process the data into predictors, etc., that you use to make decisions. And then there is the business rules engine, which is essentially it puts all of these things together and comes to a credit decision. And typically a credit decision essentially is how yes or no, do I give this person a loan or this company a loan or not? How much do I give this person, a loan? What is the eligibility, as it's called? Then what is the interest rate, which is pricing of the product, and what is the tenure, right? All of these things are very, very important, credit decisions, and Sentinel essentially facilitates all of these things. And there are a few critical things that Sentinel also does. Basically, it enables, people to visualize how credit decisions have been made. It does, it monitors anomalous cases. So, for example, if certain data points are missing, etc., that it raises alerts on. It gives the credit decisioning team a user interface to create credit policies very, very fast. It gives an ability to test these credit policies in canary mode, and or build shadow policies where you've built a policy or a decision rule and rule set, and then you can just check it in non-production environments and see how the decisions are getting made before moving or promoting these policies to production. Right, so it is and it gives an ability to simulate on past data so that people can iterate on policies, etc. And credit policies are very, very dynamic in nature. Macroeconomic environments keep changing, new channels keep getting added, certain delinquency or credit risk hotspots develop, and you have to keep responding very fast. So
Mhm.
this is like a very, very deep tool that we've created for our customers to really manage their credit portfolio very, very well. So this is something that we're committed to, and it ties together all our products on the credit decisioning space. So all of our proprietary data products like Device Connect, which is like alternative data, goes into this as templated rules. A Bank Connect, which is our bank statement parser,
Okay.
goes into very well integrated, and account aggregator flows, GST, all of this data is very well integrated into Sentinel, so that you can just drag and drop these data points and do your stuff. So this is what we've built. And in terms of IFL, of course, they were our first customer. They are our first customer, and they've given us valuable inputs. They've tried our alpha and beta products, given us,
Oh.
inputs on this. And we've sort of, really had great support from them overall, and very deep encouragement from them, because it really solves a big problem for them as well.
Yeah. So is it a like SaaS product, SaaS offering, or something else?
Yes, it is a SaaS offering.
Okay. So, I would also appreciate if you can help us understand your startup journey, because I have worked for a few of the startup companies in the past as a consultant, okay, not as an active member with them, though. And I can relate to the journey that a founder or any co-founder goes through. And what about like you? How did you get an idea? And what inspired you and the other co-founders of FinBox to start the company, and what basically the mission behind it?
There are 4 co-founders that we are sort of we came together. So one interesting piece is that FinBox we started twice. So first we started a B2C company with the same name. It was a personal finance management app in 2014-15, and we built an app with the help of some friends from my previous company, etc. And it really didn't work out because we could build an app and everything, but we were not B2C people inside. We were more B2B people, and we wanted to look at a more streamlined business with predictability in terms of the value that we were creating. B2C is it has a different nature. You have to build like a very large following, then you sort of build in monetization. And we realized that we were not like that. We didn't believe we couldn't believe our own stories, saying that okay, we'll just get to some 10 million downloads, then we'll think about monetization or what the business is. We didn't really feel like that, so we sort of stopped that. This was in Gurgaon. And then I went back to working for a logistics startup in Bangalore. And Anant, my brother also, and another co-founder, he went to this company called Home Credit, where he became an underwriting, machine learning underwriting sort of person. And then from the startup that I was working in Bangalore, I met my other 2 co-founders, and we really fit it well, and we really liked each other, and we could envision being in the journey together for a long time. And given that we had now, GoPigeon was a B2B logistics startup, and we realized that B2B also was a business. You could build software that people paid for. This is something that is interesting. And then in the interim, there was this program called Village Capital, where we just got selected by chance, which was like a fintech incubator sort of thing. And we didn't, then we were, so me and Anant and all of us were going on a family vacation to Southeast Asia. And I just asked Rijan, will you go to this program, and there is this thing called FinBox and all that, and will you he didn't know by the time we were thinking about this, so he's my co-founder, and he just went there, and he just really understood and tried to understand what fintech was at that time. And then when we came back, he just told me what was happening and all that, and we're like, okay, let's now start sitting together, and whatever you were saying, let's actually build that product.
Oh,
And then we started building the product, and we really quickly got some B2B customers, and we became revenue positive, I think, within 3-4 months.
oh, really?
And yeah, so we were bootstrapped for 5 years, and then we raised money. So we didn't really raise much money. We did raise a little bit of money in the interim,
Okay.
but mostly were revenue fed because of this nature. And
And when
yeah,
did you start? In which year?
we started in 2017-18. Yeah.
And within 3 to 4 months is what you're saying you managed to got your first
Yeah.
B2B customer.
Yes, we did
That's amazing.
good amount.
So it means
Yeah.
by the time your product was already ready to roll out in the market, or you were like basically developing after you got your first client?
No, we were developing. So basically, we built like some prototypes and stuff. So we were really good at mobile apps by then because we
Okay.
had done some stuff. And really, if you remember 2017-18, mobile was just entering fintech. And that was our USP. When we went to any clients, we just showed them like our stuff, our mobile apps and all that. And people understood that, okay, these guys like, we stood out in the market because in the enterprise space, right, mobile hadn't entered in a big way. Even now, it's not penetrated properly.
Yeah.
The mobile strategies are not very clear to people. But in those days, that was like a real USP, right?
Okay.
And then we got like very large customers because of that in the early days. And we like had a very good, super young team, which like really built stuff very quickly. So we got stuff going very fast.
So in between, of course, you must have also faced Corona, right? COVID in 2021.
Yeah.
So was there any impact of COVID?
Yeah. So our business was very. So by that time, during COVID, we only had credit analytics, which
Okay.
was like tied to the origination use case, and originations completely fell off the cliff, right? So and we were revenue fed, so we didn't have customers paying us our invoices and all that. So we very bad state. Our team took like a salary cut and all that during COVID one. But then we also realized that we wanted new revenue streams. So we built like this entire vertical of credit infrastructure, which is embedded finance APIs for originations, our loan origination system end to end.
Okay.
Got conceptualized because we were sitting at home with like nothing to do mostly, and we thought we'll start building this product, and we built it. So very quickly we built a prototype and we went to market with whatever money we had. We tried to like really use that to complete this infrastructure, because it's very hard. Credit infrastructure business is very hard, and it requires a lot of investment, lot of like functional knowledge of how credit really works, right? So that we had the toughest parts with us because we were coming from credit risk.
Okay.
But then there were other stuff that it's a very long build phase product.
I can
Typically
understand. Yeah.
companies keep building it for 10 years, and we I think could get stuff out very, very quickly, and then matured it fairly fast, I feel.
Oh. So if I understand right, your company primarily focuses a lot on the credit infrastructure and the risk analytics platforms, correct? So
That is what.
would it be possible for you to like elaborate on how different players in the industry use these kind of products, and what's the overall arc of digital lending landscape that you are solving for?
Yeah, so see, we are a B2B company, so I'll take the overall arc, as we see it. So one thing is that, digital lending has very recently like really come into business as usual for large enterprises, right? It was in the innovation bucket up until maybe just pre-COVID. Right, 2020, 2021, it was like, yeah, some people are doing it, some people are thinking about it, etc. But it became the mainstream way of building lending operations and products just recently, right? Which means that a lot of customers understand what they will take. But it is complicated for for large organizations to tie together so many different processes and digitize them together.
True. Yeah.
Right. So basically, right now we are seeing crazy, adoption of digital lending platforms inside of large NBFCs. Right. So they want to like really create robust customer experiences, tighten their risk analytics and all of those things, right? So which means that this is something that will, it is being adopted wholesale in the enterprise space, and we are sort of positioned here well to kind of do this, cater to our customers across so many different products. Right. So it is like the entire space is digitizing at a very, very healthy clip, and it's becoming a very important part of the financial services ecosystem.
Yeah, that's correct.
Right. So this is where it is, and I think our view is that these systems need to be intelligent, and they need to solve for a lot of these data-driven pieces, because data and credit intelligence or any kind of intelligent system can enable you to onboard more customers, optimize your conversion rates, look at credit risk, plan ahead, all of those things. And as this piece becomes larger, so you can imagine anybody who's doing like some 200 300 crores a month, okay, they might not need very advanced things, but as you sort of start going towards 1,000 crores a month, right, you need the processes to run that business become very, very software dependent, and it is a huge business process that you are running. So our product is very complex in that way. It's mission critical for our customers.
So if I look at your product offerings, okay, and it seems that you're heavily relying on the latest technologies, right? So how did you see this? Like, what's the role of technology, particularly artificial intelligence and the machine learning in FinBox product suite? So what's the role of these technologies?
Yeah, it plays a very big role. Frankly, the credit intelligence part, the risk analytics part is a machine learning product. So it is a huge data pipeline with ingests, I think, about 200 to 300 GBs of data per day, or even more maybe. This is like a years ago. I haven't seen what the numbers are. Maybe half a TB of data is coming through our wire every day, and our systems analyze this data and create predictions and machine learning predictions on sort of so many use cases. So credit risk, propensity to buy, collections propensity, all of these things, early warning triggers. So these are very hard sort of prediction problems per se. And it requires a lot of work to actually get this going and to get it to an accuracy that actually creates business impact, right? So because you have to like create so many data sort of pipelines, cleaning processes, machine learning training, all of that. I think we've been maturing that stack for now 5 years, and we've, I feel, done a reasonably great job overall to create value for our customers.
Okay.
So it's very important score to our strategy on building intelligent systems overall.
So are there any predefined rule-based decisioning also, or?
Yes. So as I said, right, there are 3 parts in the sort of credit decisioning or any kind of sort of financial services decisioning space. One is the data layer. So we have a bunch of our own proprietary APIs in the data layer. There's the scorecarding layer where machine learning gets used extensively. This is what I just talked about. And then there is the business rule engine. So Sentinel BREI is our business rule engine, which adds the rule-based pieces to the decisioning stuff. Because you can tune, basically a scorecard will produce a bunch of scores, and then you have to sort of tune thresholds basis your understanding of the market, or if you are being more aggressive or are you being more conservative, etc. So you tune all that in the business rules engine, which is Sentinel BRE.
Okay, so that's the role of Sentinel.
That is correct.
Okay. Now if I look at the product ranges that you have, I think it's the fintech products that you are offering is quite extensive, and particularly we just talked about Sentinel, and there was another product like Bank Connect, right? So,
That is
could you
correct.
take a moment and provide some insights into Bank Connect? And also, one of the interesting thing that if you can please help us understand that how these products enhances the lives of the end users, like making them more convenient and bringing meaningful benefits. I understand it's these are B2B products, but
That is right.
when somebody some end user like me or anyone else, okay, we start using these products. So, what are the value addition to our day-to-day lives when we start using the banking products? So
Yeah,
can
absolutely.
yeah. Hmm.
If these the so I'll quickly give you a sense of Bank Connect. So Bank Connect is our bank statement analyzer,
Okay.
right? And I will say right now we are second in the market
Oh.
in the space,
Hmm.
and hopefully we can like really because the product is
Hmm.
beautifully built and it's very accurate.
Hmm.
We're hoping that we can really become very big in this market as well,
Okay.
right? Now, the idea is so bank statement analyzer does a bunch of things. Basically, at a very simple level, it takes data from PDF bank statements, scanned statements, net
Huh?
banking credentials, or account aggregator,
Okay.
um, and applies a bunch of validations, creates a good user experience for the customer to actually upload this data so that they're able to do this correctly and seamlessly. And then it creates a credit risk report or a report that enables people to make lending decisions or other kind of financial services decisions. But say if we talk about the canonical case of lending, then for example in the consumer lending use case, you want to estimate the income of the borrower, the um, the obligations, what how much is he paying every month for rent, for his loan EMIs already,
Hmm.
etc. To
Hmm.
judge affordability, a bunch of these things, right? And if
Hmm.
you get those analytics wrong, basically, so if you get your income calculation wrong, then the person will be denied a loan. Or if you get your obligations wrong and you report too many obligations, he will be denied a loan, right? And you have to do this seamlessly, super fast on APIs, right? Because the
Yeah.
customer is sort of waiting for that decision in real time. And there are so many sort of subsystems that go through while this is happening, right? But
Okay.
this it has to feel instant for the customer, so you have to do it very fast, accurate, etc. And today we support some 800 banks with cooperative banks, SFBs, and all of these bank
Oh.
statements, which is a huge deal. India is a very
Oh.
diverse country with a different, with a bunch of different um, formats which are fairly flaky, etc. To get it right is a very hard task, and we
Mhm.
build these machine learning models to kind of get that right, and we continuously tune them and sort of work very hard to get those things right. So this is on MSME, for example. People have to show their company's income. They have to show if they're moving money in their own account. So
Mhm.
you have to figure that out. You have to figure out frauds, because a lot of people will just edit PDFs and sort of put that into the system, and you could just, there are fraud rings
Mhm.
who sort of pass around PDFs where people have gotten loans in the past, just change their names. All of these things you have to catch, right? So bunch of that also we do. So
Mhm.
we are very big on fraud analytics as well, and we do it across different data sets and on bank statements also. It's very interesting how much we see this happening, and we have to sort of catch them in time. So all this is stuff that really enables people to get access to credit, and to get access to meaningful credit that they can afford, right?
Mhm.
Because you can't give out static offers to people, and these have to be like really quick also.
And other than India, like you have footprints in some other
Yeah,
country, also
we
Southeast
Southeast
Asia.
Asia as well. So
Okay.
yeah, we started Southeast Asia. We're seeing good traction there as well.
Okay. The next thing, that I had in mind is like because you are particularly in lending business, and I myself has been into the credit card industry for more than a decade now. Okay. So maybe if we can understand the basic fundamentals of lending business, where a consumer or an end user, okay, they borrow money from a bank, right, which they have to pay back over a period of time with interest, right? And how this lending business it is different from a credit card issuing business where a customer gets a credit line and which maybe he can use to make purchase and then pay back it later, right? So what's the
Absolutely.
fundamental difference? Yeah.
So see, credit card is fundamentally a credit product, but
Yeah.
the way it gets deployed and used is different. The economics is also different because
Mm-hmm.
if you don't revolve as a user,
Mm-hmm.
the business that you make is through MDR, and it gets split so many ways and all that, right? But if you revolve, it is fundamentally a credit product, right?
Mm-hmm.
But hitherto, the underwriting for credit cards is very, very tight. Why that is the reason is because a borrower might choose to keep paying minimum, and you will not know through these
Mm-hmm.
actions if there is an ability to really pay this, right? Pay
Mm-hmm.
this amount, right? So if your entire portfolio starts to do this, you might accumulate huge amount of risk that explodes in one go, right?
Yeah.
So hitherto the credit card underwriting is very, very tight. So how people deal with this is by pricing credit cards very, very conservatively, right? So you will see that the approval rates on credit cards are very, very low compared to loans, because the nature of the product is such that you can make very, very huge losses that will be unpredictable to you, right? So you can imagine that credit cards from a credit standpoint are mispriced, basically, because as a portfolio you are so scared that you can't really do this. And there have been a lot of these accidents as well in the credit card industry in the past, where portfolios have really exploded later, right? So, but loans are, you have the ability to price them much better, because the signals are continuous, because EMIs sort of are equally distributed, etc. Loans are in a way a different different nature in terms of credit, how you assess them, etc. And you have more, you have an ability to really, say, decrease, say, the overall amount that you are giving, etc.
Yeah.
And in credit card, for example, you can't keep changing the limit every day. So all that is something so it's a more dynamic product, you can imagine, from a credit standpoint,
I
right?
understand. And how
And
these regulations like RBI central bank, regulations, how do they have an impact on lending side?
so see, in a way, RBI, so lending makes all the money in the banking system,
Yeah.
right? Everything else makes small amount of money compared to lending.
The reason,
Right.
I'm asking you, sorry to cut you down, because recently, that how central bank in India is coming up with every quarter or every few months, you see something different coming up. The new articles
Yeah.
come. Sometime you have an impact on the lending side, sometime on the even on the PPI side, or maybe on the credit line. So for that reason, I just wanted to understand from you, like, what's your perspective, how these central bank guidelines, have an impact on your business.
So see, for us, see, as we see it, the central bank is essentially saying that lending is a regulated business, and anybody who touches this business in any way
Yeah.
needs to abide by certain set of rules, either explicit or implicit. But
Right.
you have to be, there is like an implicit code of conduct, because you're touching the financial services ecosystem, which is like something that, of course, any country really wants to keep in control and keep it stable, right? And with technology, there is, so technology businesses or technology driven things per se can rapidly expand, and become very, by its own nature, it can become out of control very, very fast, right? So RBI, and rightly so, is creating guidelines for how to behave in the ecosystem, and who needs to do what, right? And given the ecosystem per se from a technology standpoint is changing so fast, RBI also has to come up with a lot of these guidelines very, very fast, right? And I think only recently has fintech come into the mainstream, frankly. And RBI has responded beautifully, in my view, by creating guardrails for the ecosystem, right? And of course, some people got the short end of the stick, but a lot of businesses in a way were in the perceived gray zone, right?
Yeah.
So for example, building a credit card from PPI, of course, from a very fundamental perspective, that is not what RBI wanted. That's why they're not giving out credit card licenses just generally, and can you like stick together 2-3 things and make a credit card? Now it is clear that the answer is no.
Yeah, of course. Because credit on PPI, this mandate when came up, I think last year, this was a revision of, I think, more clarity was provided by, I think, RBI on top of some old regulations and articles, I think. And that's how now credit on PPI is just, there's a big no for that. Yeah.
Absolutely. So while people sort of, when, people ask me about regulations and regulator, there is this certain implicit lament that, why is this happening, etc. But I do feel that this is the right thing for the regulator to do, and to set guardrails, and do it as early as possible, so that business models can be built around it and you have stable regulation. And frankly, RBI has been super accommodative. I'll give you an example. So they shut off FLDG, which is first loss default guarantee, where people who are originators but not NBFCs can guarantee a set of losses, right? And the way this was being done, they just shut it off so that basically because in a way non-regulated guys were becoming lenders in a way, right?
Yeah, exactly.
But then they came back and they relaxed it and they allowed it to 5%, right? So they have been accommodative also, and frankly I was very, very surprised that this happened, because I didn't realize how forward thinking RBI was, and this changed entirely my perception of our regulator. And given where RBI is with respect to a lot of even developed market regulators, I will say is much ahead. So we have open banking, we have UPI, we have digital lending regulations, we have co-lending regulations. There's so many guardrails that don't exist in the West also, right? So I feel it's a good framework that is evolving, and I think there will be maybe some revisions, etc. But overall the intent is clear. And I respect that intent, and I actually applaud what RBI is doing, frankly. And they also have the innovation hub and everything. So they're putting out information as well on how they're thinking. Right.
The interesting part is, Rajat, I think I was reading an article a couple of weeks ago. Some of the companies, fintech startup companies, those who are impacted after this mandate from RBI side, I think those are getting acquired or getting merged with the banks also. So banks,
yeah, absolutely,
right? So that they can continue the same business, maybe in a different way. Not exactly. At the end, it's a lending business. Okay, whether you give credit on PPI but eventually now after that mandate, you cannot do on the PPI.
You sure cannot, right? So, and see, there is a regulatory framework if you become a regulated institution, right? That you follow. And I think there are two instances. One, of course, is Slice merging with an SFB, Northeast Bank, I think, and then Bharat Pay merging with a small finance bank as well.
Yeah.
Now, from an RBI perspective, this is very clear, right? You become regulated, and it is not in the gray zone in terms of what regulations you need to follow. And it's a win-win for for the ecosystem, and I think it is also an experiment from an RBI standpoint. And my hope is that the startup ecosystem behaves in a way that inspires confidence in the regulator that this was the right decision, right? And then what sort of this opens doors to is maybe more such sort of alliances or mergers, etc., bringing fintech into the mainstream incrementally, but keeping it regulated in a framework, right? So you can imagine, if we get this right as the ecosystem, I think this becomes a way of thinking for people to really launch products and scale them beyond a point. And also for say the SFBs, etc., which are small, to sort of understand what their exit scenarios are, and they will also then raise more money and sort of build a robust enough platform so that they can maybe later merge with a fintech, etc., or open their own fintechs, right? So it makes the overall ecosystem much more dynamic, and I will say it is a beautiful piece of stuff that has happened to the ecosystem adds a lot of dynamism overall, and it is very forward thinking, frankly.
Yeah,
So
exactly.
you can imagine if, for example, RBI had given like a banking license to a fintech, it would have been super difficult for them to understand how these folks behave, what they do, etc. And to teach how to behave like a regulated entity to a company which is like a startup, right? Which is
Yeah, I
who
understand.
fast break things become. How do you teach like being regulated and being responsible and being cautious and deliberate about everything to like a company which is run by say a 25-year-old, right?
Yeah, true.
So you can imagine this is like a mid path, which is beautiful in my view, frankly.
Yeah, exactly. At the end, if they are getting merged, so they still continue with their business and they're making it,
Yeah. And
out of their way. So, I think the another thing is the security aspect. If we can maybe spend a couple of minutes on this, because in our high tech societies, Rajat, while on the one side the technologies continue to grow rapidly, there is always a threat or a concern to the data security as well, right? So
absolutely.
in FinBox, maybe I was willing to understand that how do you approach the balance between the technology advancement and the ensuring security and the data privacy, or for its user. So
Yeah,
what's the
absolutely.
parameter that you are using in FinBox?
So there are two, multiple things. I think at a policy level, right, you have to follow, the RBI's DLG guidelines. You have to
Mm-hmm.
follow the data protection and data privacy and data protection bill,
Okay.
right? And how it's drafted, and you have to essentially figure all of these things out. And it's a dynamic environment in terms of data anonymization, etc. What we also do is spend a lot of time and energy on getting external agencies to audit each part of our infrastructure, right?
Okay.
So as we I think do like 8 audits a year, and we have like a separate team which like really critically looks at all of these things. Third, what you need to do is train folks on security. This
Mm-hmm.
is something that we started last year, where we sort of bought certain courses, etc., and we gave it to certain people to experiment if they could learn security on their own. And this is something that we are now starting to cross pollinate across our engineering organization. And I think it is important that you sort of use all of these techniques to sort of get to a point. So we recently got an SOC2 certification, even though nobody sort of asked us to. We've done a bunch of this stuff, but we will continue to invest in this area. Thing is that it is important for the customer base also to understand that all this is while this is stuff that we invest in, this ultimately is a service to them as well, right? Because this is something that they also need to have a high bar while selecting vendors, in terms of what they need. And ultimately this also means that the price point of the overall ecosystem, as they comply more and become more sort of security focused, shifts a little bit as well. These become more premium services overall, right? So I think that the ecosystem will also need to understand, because these are very large investments that you make in building up these these sort of services and sort of complying, right? So this is something that we are making, and hopefully everybody can sort of be sensitive to the security aspect. And I think we will continue to make more investments in this area.
Okay, that's really great. Before we conclude today's discussion, Rajat, the last thing that maybe I want to ask you, being a CEO of a company, what kind of challenges do you face, and would you like to give any message or advice to other startup companies and entrepreneurs looking to venture into something similar into the fintech space, or especially in the context of embedded finance? Any message, any advice from your side?
Challenges. So see, startup is like a series of challenges. Every day is
Yeah.
a roller coaster. So I think about challenges is that you have to be on your toes. You have to sort of love this
Mhm.
piece, right? Of course, if you don't enjoy solving problems every day, then startups might be too stressful for you, because
Yeah.
what it is about. And you also can't beat yourself up for everything, because you can't get everything right also.
Right.
There is potentially infinite amount of work that you need to do, and there isn't infinite amount of energy or time. So just enjoy the journey, and sort of it is like solving a lot of puzzles, right? That is what I will say. And I think for the young entrepreneurs, I will say that startups are not a rational choice, right?
Yeah. I
The
understand.
success rate of startups is very low with respect to the number of attempts and the energy put in. But there is one thing, is that if it is a burning desire to do something on your own, then
Mhm.
you shouldn't think twice. You have to jump in. And very interestingly, I will say that there are no downsides. The upsides might be irrationally low, right, because of the success rate. But
Mhm.
there are no downsides, because you learn so much, and the way you think about the world changes completely, right? If you are an entrepreneur, you know how to get stuff done with very little resources. You know how to not stop even if the answer is no from 100 people. You just know the world works differently.
Mhm.
Stuff that anybody who's not done a startup will not even feel. It is like you know
Mhm.
change of medium. It's like, okay, it's like how to tell a bird what it means to swim in the sea, right? It's just that.
Mhm.
So entrepreneurship is very different way of living, I feel. And if you
Yeah.
are an entrepreneur at heart, then you shouldn't stop at anything, I
Yeah,
feel.
I understand. But what do you think about the work culture and the work life balance in a startup company?
So there are this is something that we were just talking about today. So see,
Mhm.
everything is stage dependent, right? If you are, so for example, today we can't prioritize being comfortable, because
Mhm.
we are just fledgling.
Mhm.
And a lot of our institutional muscle is still not formed, right? Do we get everything right? Do we have processes for everything? No, everything is effort today, right? But as you mature as a company, small things get taken care of. You have people for very defined tasks, etc. As team members, they will take care of a lot of things, and they will make the trains run on time. Today, making the trains run on time is itself an effort, right?
Yeah.
So it is very important to understand as a person, as a team member, what stage of company you are made for. If you are like an early stage guy, you will see all the chaos as opportunity. You're late stage person, you will see it as a big pain. You will see it as stuff that needs to be fixed before you get anything done, right? So it is important that you understand where you are, where the company is in its own journey, right? And some of that means that in early stage companies, you will not have as much work-life balance as you want, and it is antithetical to the success of the company. And then later, you become a more sort of, everybody sort of becomes a decision maker rather than a doer. So a lot of guys become decision makers,
Mhm.
and good decisions count for success, not like raw effort later. That's my hope, though. I don't know. I've not gotten to the late stages myself. But today, I will say that success is determined by the people who are willing to push themselves very, very hard to get stuff done, because each of the opportunity that comes our way has very low success probability if you just do the bare minimum.
Excellent, sir. Thank you. Thank you so much. I think it was really great knowing you, your journey, and it was truly an honor and pleasure having you here with us, Rajat. And thank you so much for your valuable insights about your business, about your journey. Thank you so much.
Thanks, Ramesh. Thanks, Ramesh. This was fantastic. Thank you so much for having me on the show.
Yeah.
I hope success to the show, and I'm hoping that people enjoyed this conversation.
Yeah, exactly. So I hope everyone, those who are watching this session, they must have enjoyed. And thank you so much for watching. And stay tuned for the next podcast. Thank you. Bye bye.